in this, shared ledger that we all, in this, shared ledger distributed setup with no third-party authority, where we can have digital assets, digital tokens that are unique, non-copyable, where there can be immediate transfer of ownership, and where we can use smart contracts to program them. That is new and different. And using digital assets or crypto assets, we believe we can create tokenized assets markets that do a lot of neat and interesting things. They could be faster, cheaper, more secure market infrastructure than what we have today, mainly because we believe we can get rid of the expensive process of reconciling tons and tons of databases, and with via tokens, we can. I don't like to talk about disintermediation anymore after 5 years in this industry. I like to talk about right-sizing intermediation. So we can get rid of a lot of unnecessary intermediaries and rent seekers probably with digital assets, and that will bring down costs as well. I also mentioned that these higher levels of automation, and we believe that tokenized assets can bring a lot of innovation into asset markets, fractional ownerships, decentralized autonomous organizations, etc. So that sounds really, really great. So what's the problem? Well, the problem is, to date, the last mile, so payments. So in the beginning of the tokenized assets revolution, in the beginning of blockchain, we all thought we could use cryptocurrencies for payments, right? But cryptocurrencies are not very good for payments. They're extremely volatile. Bitcoin and Ethereum and most blockchains are kind of slow. They're not very good. We discovered that Bitcoin's not very good for payments, even if you stay within Bitcoin. So this whole bridge from the crypto world to the fiat world has been a huge problem. The first way that people decided to deal with this problem was through the invention of stablecoins, which are basically just cryptocurrencies that are made stable by one of various different methods, which I won't go into. But you can have stablecoins backed by fiat money. You can have stablecoins backed by other kinds of assets. You can have stablecoins backed by crypto or backed by algorithms. And the idea was to deal with this volatility in the cryptocurrency space, so that we could have a viable bridge to fiat or a viable payment option. So, yeah, and the stable coins were also a very big topic, especially in the last year and a half. And probably when it came to stable coins, there was none bigger than Libra. So as many of you know, Facebook announced that they were going to put together a stablecoin project of their own. It's not just Facebook, but it's very much associated with Facebook. And whatever you think about Libra, and whatever you think about whether it's going to succeed or not, there's absolutely no doubt that the announcement of Libra was one of the main catalysts behind central bank digital currencies and behind the central bank interest in this, because a private money, which is what Libra would be, that has a potential user base of in the billions, is a significant event. And I think it's safe to say that this was a wake-up call for a lot of central banks to say, wait a minute, we've got to react here. So what exactly is a CBDC? That's the next chapter in our presentation, in our paper, was talking about CBDCs. We started with what is central bank money, so some basic financial system background. A central bank money is simply money, a legal tender that basically represents a claim against the central bank itself, and it has to be compared or differentiated from commercial bank money, which is money that's created by commercial banks when they issue credit, loans, or other kind of credit. And as most of us probably know, most of the money used in the world today is commercial bank money, not central bank money. So central bank money is generally used for wholesale payments. And really the only time that you get central bank money in your hand is when you use banknotes and coins. And the percentage of cash in the economy, or cash, is a very, very low percentage of the money that's circulating in the economy. If you're going to make a central bank digital currency, You know, what kind of a beast is this? Well, a central bank digital currency would be a digital asset in the sense that I talked about before. It would be a crypto asset, issued probably on some sort of distributed ledger, but it would be some sort of tokenized, generally, hopefully blockchain based, some sort of tokenized digital asset. It would be backed by the central bank. So it would represent a claim against the bank the same as banknotes do. So basically it would be digital cash. And a central bank digital currency would be controlled by the central bank. So the central bank could issue it, and the central bank can take the coins out, take the tokens out of circulation. And an important thing to look at when we talk about CBDCs is that there's two basic kinds. There's wholesale CBDC, which is basically used by banks to facilitate interbank payments. So it's basically the same as central bank money that goes to financial institutions. It's CBDC for institutions that already have an account at the central bank. And then there's retail CBDC, which, if it was to come into fruition, would be the definite innovation here. And that's CBDC that would be used by the average person. So used for retail payments, used for going to the store, used for buying chocolate and beer, and really akin to digital cash. So those are the two main paths that you have to think about when thinking about putting together a CBDC. So I mentioned that all of a sudden last year and now this year, there's been a lot of interest in CBDCs. According to the BIS, there was a very famous study a while ago. 70% of central banks are looking at central bank digital currencies. That sounds like a large number. I took a look at the presentation a while ago, at the report a while ago. I think I counted something like they surveyed 75 banks. So I think the 70% represents something like 45, 46 banks, if you do the math. But that's still a significant amount of central banks that are looking at this now seriously. Most of the looking at means that they are studying it, and there's a bit of experimentation going around, though there's not that much actual experimentation. That's set to change, by the way. There's definitely all of a sudden a lot of talk, and most of the work has been focused on wholesale CBDC, but I expect that to change as well. Perhaps sooner rather than later. Here we talked about some of the more interesting projects, and if you give me a second, I'll I have some notes here on that because some of the interesting stuff that's going on. So of the projects happening now, probably one of the most interesting and potentially disruptive is obviously the Chinese, who have said they intend to issue a digital yuan. That obviously, considering the what you might call the user base in China, is also big news. There isn't that much information available about how this is going to work. And one of my guys in ConsenSys said we're not even sure if it's a blockchain or not. But obviously, any sort of digital currency in China is going to be big news. Singapore has been doing a lot of stuff, a lot of, not just a lot of studying, but also a lot of practical proofs of concept under their project Ubin. That's been going on for quite a while. I think they're in the 5th or 6th stage right now. ConsenSys was involved in some of the early stages and some of the experiments there. The South African Reserve Bank in the project Coca is also very active in CBDC. We also were involved there. And they've recently put out an RFP to do some more experiments on it. Sweden has been quite well known for its eKrona project. Canada's quite active, and I didn't know this until recently, but apparently the Bahamas are quite advanced in their plans for a CBDC on the retail level. So that it'll be something that that pretty much anybody can use. It's a retail CBDC, and you can up to a certain amount, you can just get it on your wallet without any kind of KYC. And then if you get more and more and more, the more you have, the more sort of you have to identify yourself and go through a KYC, maybe an AML. But they're really looking at it as a practical payment option in the Bahamas. And there are other projects as well.
Tom,
yeah.
a little question from my side.
Yeah.
Is that overview here, is that your view on the world where you are involved, or is that really a general overview of projects you are aware of?
This is it's more random overview of projects we're aware of that we kind of think are interesting.
Okay,
So
I see.
some of these we're involved in. So we're involved in Ubin, we're involved in Coca in a big way. We're not involved in the other ones. And there are other projects as well.
Just an information to the crowd. You can enter a question, or you have a chat function called FNA, I think FNA, and there you can send a question, or if you want to ask a question also, I can make sure that you can enter the space, just for information. Okay.
Reto, you'll tell me the questions because I can't see them on my screen because I have a full screen.
Sure.
Okay. All right, cool. Should I continue?
Yes, please.
All righty. Okay. So then we talked a bit about the difference between a wholesale CBDC, a wholesale central bank digital currency, and a retail one. I'll go through this quickly. I think I mentioned wholesale is for financial institutions, retail is for regular people. Wholesale is used for interbank settlements. Retail is used for retail payments and also deposits. You can save it. On the wholesale side, and this is kind of interesting, there actually already exists a pretty robust infrastructure with real-time gross settlement or various daily net settlement options. So banks can settle between each other already very quickly, already almost in real time, and the infrastructure isn't bad, although there are some problems with it. On the retail side, there is, as of yet, really no viable broad-based digital option. All we have is banknotes and coins. And on the wholesale side, you don't need to have tons and tons of transactions per day. On the retail side, you have to be able to do hundreds of millions of transactions per day, obviously. So these are sort of the differences between the two worlds. Then we talked about what the benefits could be of a central bank digital currency. And here it gets kind of interesting. On the wholesale side, we said, look, foster digital assets revolution. So one of the main benefits of a central bank digital currency would be to address this last mile payments problem that we talked about, and really allow blockchain-based or tokenized asset markets to flourish, because we'll be able to finally do these, be able to do payments. You'll have, be the key ingredient, as you wrote, to a large-scale decentralized clearinghouse and asset register, and really allow digital assets to reach their potential. So it's kind of the missing ingredient. We think that CBDCs can help on the interbank payment side as well, despite the fact that the infrastructure is quite good. There are still some issues. It's old with the technology, so maybe we could if banks could trade tokens between themselves, might be able to improve things as well. We could reduce the cost of cross-border remittances if central banks in different countries had digital currencies that were interoperable. It would definitely make it easier to send money between countries. And last but not least, on this one here on the Libra side, and this counts for wholesale as well as retail CBDC. I mean, if digital assets markets, if tokenized asset markets become a large part of the economy, if they become significant, and if central banks aren't involved in this and don't have their own currencies in this economy, then people are going to turn to private currencies like Libra or other kinds of stable coins. And that could be a problem for the central banks in terms of maintaining control over monetary policy, being able to regulate the markets. And this is the real reason why Libra woke up all these central banks, because they're worried about private money becoming a significant part of the economy. Before Libra, when it was just kind of a bunch of blockchain crazies running around experimenting, it wasn't really on their radar. Now it is. If you had a retail CBDC, you could reduce the usage of cash, and you didn't really think about it, but cash has its own cost. You have to print the banknotes. You have to deal with. I mean, I understand, for example, the South African central bank. They've got a problem with cash as a sort of enabler of criminal activity, right? So the you know, despite the knock on cryptocurrencies, the biggest payment form of payment on the black market is still a suitcase full of cash. So you could address that, but also in many parts of the world, it's actually hard for people to get their hands on cash because they don't live near a bank, they don't live near an ATM. And if you had a CBDC, you could put it on a phone, which they do have. So we've seen with like M-Pesa and stuff like that, we've seen a very successful, you know, smartphone-based payment options in developing countries. And if you had a CBDC, you could piggyback onto that. You could retain sovereignty over monetary policy, which I think central banks are very interested in. Foster digital transformation as well. So these are also some of the benefits. I'm worried about time here, so we keep going. There are also going to be challenges if you have a CBDC. One of the big challenges is that it could disintermediate commercial banks, because if you can get your hands on central bank money, that's going to be considered. It's definitely it's basically risk-free money. You know, so if you know, most of the money in the world is commercial bank money, and there is a certain kind of risk in that. You have counterparty risk with the entity that is issuing the money. So we're worried about you know, people just flocking to CBDC and leaving the bank deposits empty, especially in time of crisis. We could see bank runs. Another issue that central banks have to worry about when they issue a CBDC is simply if they are not just the issuer, but also if they run the platform, right? Then they've got to get involved in the technical aspects of it. They have to make sure it works well. They have reputational risks if it doesn't work well. It's going to be expensive to introduce. They have to be involved in day-to-day activities on a retail level. So this could be kind of complicated. And also, if you had central bank digital currencies for lots and lots of different countries, and they were interoperable with each other, then you might see people in country A flocking to the money of country B. For example, dollars or whatever would be seen as a safe bet. So that could be that could cause problems on a macroeconomic level as well. Okay, then we talked about the requirements for a CBDC, and we talked about it on two levels. First was the design decisions and considerations that a central bank would have to take. Decision number one, you have to decide what kind of a CBDC that you want to issue. Is it going to be wholesale? Is it going to be retail? Or potentially both? Then you want to talk about how is it going to be distributed? Are you going to is the central bank going to distribute tokens directly to the whole population? Are they going to do it through traditional intermediaries, through the commercial banks and other big financial institutions, as is kind of the case now? Or, and that's what we're going to argue for in our paper, can the central banks use intermediaries, but sort of a new type of intermediary, or a larger group of intermediaries than is the case today? You're going to have huge governance problems with or governance challenges, let's say, with this kind of a network. Who owns a network? Who decides how it's going to be run? Who runs the nodes? You know, who makes the final decisions? Who's liable? And then I think a very interesting discussion around CBDC and around digital money in general is the whole privacy versus transparency discussion. And that's for somebody like me who's more of a layperson. Definitely a concern with any kind of digital money is that if it's digital, it can be monitored, it can be surveyed, it can be taken away from you. So the system that a CBDC system to be acceptable, I think, has to allow for a certain amount of privacy. The question is to what level? Because on the other side, you don't want it to be the Wild West either. It should be able to support AML and know your customer regulations as well. Another consideration is, should it be token-based or account-based? So that's also a very interesting sort of interesting discussion. If it's token-based, basically the CBDC is the equivalent of digital cash. Okay, so it's you actually exchange the tokens, and it's more of a bearer instrument. And if it's account-based, so in order to use the token, you just have to prove that you have the private key to it. Right? You have to prove you have some sort of ownership to it. You don't have to say anything about who you are. If it's account based, it's more you have to the money is assigned to you, to your ID, and in order to use it, you have to prove who you are.
Tom,
yeah,
there are some questions from the audience. Is that the right moment to ask them?
Yeah, sure. If I can answer them, sure.
Okay. One question is, it would be interesting to know the stage of these CBDC. Are they already in circulation or still POC?
No, it's all POC.
Okay. What is your expectation? Is there one to watch for? So is there one that is very advanced?
So yeah, that's a very good question. We don't know. I understand that the Bahamas are very close. I think Cambodia was talking about issuing one in the next couple of months, but I really think you have to watch what happens in China.
Okay.
We just don't know, but when it comes, it's going to be like a big bang.
Okay.
But just as you know, just to contrast that, I mean, the Swedes, the e-krona exists, right? But they're not gonna use it. I mean, they've done experiments and they've kind of issued it in a test system, but they have no plans to actually roll it out yet.
Yeah, another question came from Vitus. He asked the question if where the US dollar, I mean, US dollar still is the most dominant currency in the world. And when you remember the map, we have seen it's Swedish krona, China, Bahamas, South Africa, but the US territory is not touched. You as an American, what do you think? I mean, we know you're the biggest. What do you think? What's going on there? What is the U.S. government doing? And especially also if they do nothing, what happens to the dominance of the U.S. dollar? That's the key question.
So that's an excellent question, and you know, my take on the whole U.S. Response to this and to blockchain in general is different parts to it. One, the Americans are very much aware of crypto and very much aware of blockchain, and they're very knowledgeable. So it's not that it's not that their heads are in the sand, but there's been a lot of resistance. And I don't know of any plans for a digital dollar. People talk about it, but I think that there are those in the States who do worry that central bank banked digital currencies could be a serious threat to the dollar, especially like a digital yuan. And a lot of people see the Chinese digital currency as another way for the Chinese to sort of chip away at the dollar's dominance. So it's definitely an issue. And I think also in the U.S. the Libra thing will come up. But you got to remember the problem in the U.S. is that there's no one decider, right? There's so many different regulators and so many different and so many different actors involved. And as you know, the U.S. political system is highly functional. Anyway, I won't get into that. But I think that I don't know of any plans to do it, but I think that the U.S. needs to react.
Yeah, I think that's a good. I'm not sure about the U.S. system. I know that every state is on their own. They have more. I mean, you can go with a state bankrupt, but I don't know the connection to the currencies, that any connection to that. So that's the big difference to Europe. Another question is, would the presentation be shared, your presentation?
Yeah, sure.
Okay, cool. Okay, I think we provide a link, and by the way, we have also a YouTube live stream going on. Need to send the link, but it doesn't make sense to look now to it. It's because there's a delay.
Yeah, in the end, we'll figure out how we're going to share the presentations, probably by email. So James Bond asked that question. Oh, what an honor to have you, James Bond, in this Zoom call. We're going to share if you're going to share your MI6 or was it MI7 email address, sure, we'll send it to you.
But is that the old James Bond or the new James Bond?
Good question. Which one are you, James?
Okay, great.
That's pretty good.
So Reto, it looks like I'm out of time. How much more do you want me to go? I've got
the old one.
Okay, great. Do you also? How long time do you plan to?
I got another like 3-4 minutes, maybe 5 minutes.
Yeah, that's perfect.
Just to go through some of the stuff on the on how we want to set it up. Okay, so fine. So these are some of the success factors, or some of the things that central banks have to think about. Talked about token account base. It has to be performant. Obviously, it has to work 24/7. It has to offer near immediate transaction speed, so it can't be slow. And it has to be legally sound. And as with anything with crypto, it's the legal and regulatory stuff is really, really thorny. And that's going to be a lot of issues. Not only, is this what's the legal status of a CBDC? Okay, the central bank probably not so bad, but what's the liability if the system runs down, or if tokens get hacked, and all this other stuff. So that's definitely a serious problem. On the technical side, we said, look, to work, a CBDC has to be technically under full control of the central bank. So it's the only entity that can issue the tokens and the only entity that can remove them from circulation. It has to have this real-time asset transfer at negligible cost. So transaction times have to be fast, and they should be at sub 1/10 of a cent the transaction costs. Has to be fast, has to offer high volumes. We said before, a payment system needs to be hundreds of millions of transactions per day. We think the system should support a large number of network participants. I'll go into that in one of the next slides. But in terms of the blockchain system, which should be able to support a large number of nodes and a large number of active participating nodes. We have this privacy issue that we talked about before. Our view of ConsenSys is that that central banks should not be able to have a view into individual wallets and IDs below a certain transaction level. So our sort of way to approach this dichotomy between privacy and transparency and compliance is that we say for lower value transactions, like cash-like transactions, we don't worry about AML and KYC. This is what the Bahamas are doing, by the way. And then as you start to get to higher and higher transaction volumes, then you can put in technical, you can implement KYC and AML in various technical ways. And obviously with digital money, that's easier to do than with cash. And we believe strongly that any system should have some sort of asset recovery model, because people are going to lose their keys, and you don't want to lose all your money if you lose your key. So these are kind of the high-level technical requirements that we came up with. And here, sort of, this I found interesting when we were working on the paper. So the setup that we're talking about, and I think a lot of other people are talking about as well, is one, you don't have the central bank issue tokens directly to citizens. So the central bank is not going to be involved in running the whole system. What the central bank is going to do is it's going to issue the CBDC to intermediaries who are then going to use it, and people will be able to use the tokenized fiat among these intermediaries. Okay, so that has the advantage that the central bank doesn't have to worry about making a wallet, doesn't have to worry about the whole usability issues, doesn't have to worry about the technical aspects of the system necessarily. But the point is, on the intermediary side, we're saying, look, instead of just issuing to financial institutions like happens with wholesale money today, right? We can expand through the blockchain network, expand the number and type of intermediaries that could be involved. So it could be banks, it could be fintechs, it could be other kind of organizations we don't know yet. But they would, it would provide more interfaces to the public in order to, more interfaces to the public to use this central bank money. So we suggested this, and last but not least, and this is way beyond my technical understanding, but this is sort of a technical schematic of this setup that we talked about in the paper, where basically you have a base layer that's a blockchain settlement layer. Then you have a network layer on top where we have state channels between the different intermediaries. Intermediaries can also operate their own side chain, so you can do transactions quite quickly and then sort of settle later on the settlement layer. And at the top end, you have the end users where people can build, cool dApps and wallets and stuff like that on top of the system. So again, this gets technical. I think for me working on this project, and I'll end here, the takeaways were that the main takeaways were, one, that it's amazing how all of a sudden central banks have gotten interested in this. It's amazing how the Libra thing really was a catalyst. I think we're going to see central bank digital money of some kind sooner rather than later. And I think that from a user perspective, and now I'm talking on a personal level, I'm not talking about, this is not a consensus view, I'm talking on a personal level, I think that that the whole discussion around digital money is interesting. It could be innovative. It can also be quite dangerous in terms of issues about privacy, which is something that I care about myself. But we can expect a lot to happen on this score, and I think that that this is, if you get viable CBDC, it's going to catalyze a lot of stuff on the tokenized assets markets. And I think with that, I will stop. That here is the link to the paper. The QR code is the link also to the paper where you can download it. But as Reto said, we will circulate the paper, and all that information will be in there as well. So I hope that was interesting and not too high level. And yeah, that's it. Thanks.
Okay, thank you very much. That's fantastic. Let me share the program we have here. Yeah. So. Okay, we had one question with regard to the South Africa.
Well, regards to user experience in general.
What's your take on user experience in a situation like South Africa, where occasional cell network outages happen? Do you have? Yeah.
Sure. So look,
answer that.
That's a very, very good question. But that's not a question only for crypto, right? That's a question for our whole world going digital, right? What happens to people when systems go down? There are still people in the world who don't have cell phones, right? There are people in the world, there are people in the world who, for various reasons don't know how to use them. So these are all serious issues. I mean, there are backups to cell networks. You have satellites, you have other things, but no, if we rely on this technology and it goes down, there's a huge problem, especially if there's no cache at all. Hope that answers the question.
Okay. Sure, cool. Thank you very much. Let me check if there are questions. As we said, there's one, another.
Will you suggest Ethereum or Hyperledger? This is coming from Florian Schwanzara.
So I on purpose didn't mention the fact that this paper is also about, we suggest Ethereum, but we do. And the reason is that there's several reasons, but Ethereum is growing up. There's permission versions of it now, but we believe that Ethereum is probably going to be the most interoperable, right? It'll if it develops into a sort of a broad-based public Ethereum could serve as a global settlement layer. So we like Ethereum, but I guess we would.
All right, good stuff. Any other open questions? This was answered in video. Right, so it looks like there's no more open questions, and the chat also seems empty. Awesome. So thank you for that presentation. Super interesting. Good insight. And Reto, what would you suggest? A few minutes break, and then we'll go over to the next one.
I think so. You deserved a coffee, I guess. Just take 2 minutes, 2 or 3 minutes. Some music, and then after that we come back to our panel. don't miss it, because it's really, there are some tough questions for our guys who are in the crypto space as a bank. And I would say 2 minutes and then come back, okay? Awesome.
This man is a ticket for a ghost train. I believe what you said, but I never do it once again.
So we are back. Hope you had the chance to get a coffee. We now going into the panel discussion. I would ask, please, to the panelists to activate the camera, and so that we can, of course, yeah, it's up to you. And then we're going to go into this discussion. I would like to start the panel with a short introduction of the panelists. They will do it themselves. I would like to start with Katie from Falcon Bank. She has 1 or 2 slides to share with us, and then we continue with Georgine. Georgine joined us from SYGNUM, and then we also have Antonio Ferrante, who is a former CEO of a bank, and he is now in the territory of crypto and crypto technology and serving banks. Okay, I stop now sharing and would like to ask Katie. Katie, are you there?
I'm here and sharing.
Fantastic.
Can you see my slides?
Not yet.
Okay, let's try that one again.
But we can see you.
Thank you. That's a good start. I have this technically. Hold on, let me try that one more time. Maybe it works now. There we go.
Yes.
Now we can see your
Fantastic.
slides.
Lovely.
Awesome.
Great. So pleased to be here alongside my colleagues that were just briefly introduced. A little bit about myself and my background, and then I'll move into what the company, or rather the bank, Falcon, what we're doing, and why I moved into this space. So first, I'm a veteran of the financial services industry with corporate and digital environments in my rucksack, and I've had the great opportunity to work for some of the world's leading institutions in this space, like Salomon Brothers, IBM, Credit Suisse, and UBS. And I've also worked for small dynamic companies, so not just big firms and matrix organizations like Fairwind Partners based in the US. I've had a chance to work with a small dynamic startup, so I know what the level playing field looks like. So at Falcon, as my title suggests, I'm head of the custody and trading, and I'm also head of process management. And I'll come on to a little bit more what we do exactly in the next slides. But my background is based in banking, and I have degrees from McGill University and Cass Business School, and then also in Cambridge. I did an MPhil in international relations to give myself a bigger view of what goes on in the world and what drives us. And I've also pepped up my background also because I think it's great to continue to learn, because our skills continuously need to develop. And I started looking into how we do what we do, and that's Lean Sigma. That's all about how processes are put together and how we can optimize that. And I think in the blockchain space, what's super exciting is exactly that. Blockchain is this new glue of transparency and allows us to do things we've never thought of before. And I think Tom has shown us what we can do that on the financial side, with potentially having an e-coin for central banks. And I'm also a fan of the digital side of what we do, going from analog into the digital. I think people underestimate just what the difference of the landscapes are. And here at Falcon, and I'll just scroll into that, we are bridging that gap between the analog and the digital. I won't say too much more about that in detail. I think that comes up in the panel, but we focus on cryptocurrency trading and investing, digital asset custody in a banking grade environment. And also we have bank accounts for corporates, blockchain corporates, as well as ICO and STO business banking. Those are the areas that we're focused in. And that's what brings me to why I really came to the bank. So I've been with the bank since November of 2017. And the bank started its business in July 2017. And the main driver of why I'm here is because I want to be part with everybody, I think, that's attending this session today. I want to be a part of making history happen and not simply read about it. And I do that my way, starting here at Falcon Bank in a private environment. So I think that's wraps me up on my introduction.
Thank you very much. Fantastic introduction. I would like to turn to Georgine. Georgine, I think, has a similar career. Also, you were in a big corporation before that, right?
That's correct. Exactly. So good evening, everyone. My name is Georgine Roesle. I joined SYGNUM as first employee after the founders. So joined even before the company was actually incorporated. And as a result was involved in many different areas since the beginning. And currently I'm focusing on sales activities and client products. My career started with a bank, with a banking and finance background in a bank within HSBC. I started in London, then I had different appointments in Luxembourg, Hong Kong, New York, Geneva, especially on the product side, product advisory side, alternative investment, fixed income, and general investment advisory services. After which it really struck me that you had a lot of different systems for different asset classes, and you needed to put together a lot of big amount of money to launch certain tailored products that I thought, with automated processes, you could do that much more efficient and at a lower price as well for the client. I took a break and went for an MBA, after which I then joined Leontech, where I saw that with a greenfield approach, how they built up the business, they were able to reduce the cost per product year by year. And this was again then music to my ears, really bringing together the technology advantages within the financial environment. I was there active rather on the strategy and corporate development side, and lived through growth also in terms of company size. When I joined them, there were around 250 employees, and when I left them, we were around 500 employees, which was also very entrepreneurial environment that equipped me then to join SYGNUM and go on this fantastic journey. For me, really, the point where I decided to join SYGNUM was obviously not only about the great people around me, but also blockchain gives so many opportunities to an area where there are just still a lot of processes quite slowly set up and inefficient. And either I told myself I would start to understand blockchain, or I would just become a user. So it didn't take me long to decide to join SYGNUM. What we built up now at SYGNUM, we became the world's first digital asset bank. We really focused on the digital assets, so providing a gateway in a regulated environment for qualified investors, institutionals, asset managers, corporates, but also banks. We provide custody services, brokerage, certain asset management products that we launched already, credit products as well. But also we think that it's not a winner takes it all market. And therefore the technology stack that we have now built up, we also would like to offer it to other banks who wish to enter the digital asset space and who already have established relationships with their clients over many years. And we would like to enable them as well to offer digital assets to their clients, because for them, it's often the question of how quick they want to be in the market at what cost. And with the setup that we can provide them, they can enter this space at a relatively low cost in a relatively short time to market.
Okay, great. Thank you very much for joining this impressive paths you had and join this adventure. Antonio, you have also a very impressive career path so far, not in a bank yet anymore. You're at Core Technologies, one of the senior advisors, what I understood.
Yes, that's right. Core Technology and the sister company, Phoenix System, has actually been a pioneer in the crypto space. They've been doing one of the very first tokenization projects, and they're doing nodes as a service, so they are in the infrastructure field, up and running, not as a project, so serving already clients, making money on that. And foremost, they have a state-of-the-art storage solution. And there as well, compared with the other provider of storage solution, it's I think probably the only company who also delivers the interfaces to the core banking systems and all the analytics tool, which today is required by the institutional, by the banking industry for the regulatory purposes. My role there is definitely to build the bridge between the banking requirements and what the technology could provide. And thank you for having me, by the way.
Yeah, sure. Thank you very much. Let's go now in the panel discussion with the very first question. Before we do that, I would ask to just keep the panelists, the video open, and the others just click on the video. So we have really the panelists and consume the panelists. So I go out as well here. Maybe Tom, you can also click your way, and then if you like to join the panel, then it's you can click on the video. That's fantastic. I would like to start. My first question goes to Georgine. Very simple question: is SYGNUM a crypto bank?
I would answer this as it depends. Of course, SYGNUM offers services for cryptocurrencies. We, however, have also built up an infrastructure to offer services in a wider sense for digital assets in general. And here I'm just also doing the link to what Tom mentioned before, so programmable tokens, where you can also add smart contracts, etc. So this is a space that we're also working on developing. We want to really facilitate bringing the real economy on the blockchain and make today unbankable assets also bankable.
Yeah, excellent. My question, pretty the same one. I think your answer is no on that. I guess, Katie, when I ask the same question, is Falcon a crypto bank?
Well, I think it depends what our clients think. So Falcon, by our license, we've been a bank, and we're a private bank for over 50 years. So essentially we're a private bank, and what we've done is we were the first Swiss bank in 2017 to give access to investors into crypto assets. So we've been on the block for well over 2.5 years, and also providing custody solutions for their assets as we would any other asset. So we treat cryptocurrencies as an asset, and you can get that in your banking statement, just like you would anything else that you're holding: bonds, stocks, or cash, or commodities. Now, the interesting thing is Falcon has different types of clients. And I think we've discussed that there is this opportunity that blockchain's created and allows us to offer new things. And that also attracts not just our existing classic investors, but also individuals who got in early to crypto, including crypto whales. And they come to us, and I think they would see us as a crypto bank because we're crypto friendly. And they come to us for custodial services. And they also, if they want, they can bridge the gap into our traditional services, such as normal mandates. So we bridge that. So I think, to answer your question, by law and by our license, we are a normal private bank, and we are able to offer crypto services that have been audited and agreed to by FINMA and PwC, our auditor.
Okay, thank you very much. When you talk about clients, I could assume that since crypto is not just done by these ordinary private clients, are you also connected now to young people who former coders who suddenly have a lot of money? Or is that?
Well, I wouldn't want to talk about the age of our clients, because traditional investors don't have to be ancient. They can also be young as well. But yes, as I mentioned, what's been really fascinating is opened up because we have this USP to attract actually clients. We have the ability to take on, and we call that direct transfers. If somebody actually has a position on their own private wallet and wish to bring that into the bank, we can do those direct transfers. So we have early investors. Yes, we do.
Okay, sure. How is Europe experience with SYGNUM when you talk about the age. I mean, when I was at UBS, the age of the clients was pretty high in the wealth management, and I don't know how it looks like on your side at SYGNUM.
It's actually interesting. So as mentioned before, we only take on qualified investors as direct clients, and really they're in all age ranges. So we actually see very much also not just those that have been in the space for many years, but also those that are now moving from the traditional side more into the digital asset side, and they're just starting to allocate a bit of their portfolio in the digital asset space. And even there, the age range is very diverse.
Okay, thank you very much. We're going to go now to the second question about technology. I mean, this blockchain technology is quite long now in the banking. It's quite a surprise to me when I was at UBS that the blockchain technology was quite a hot topic years ago, but not with regard to the crypto space. It's much more in the internal environment where you can bypass these internal intermediaries, like also you can improve processes, etc. And I believe, Antonio, we had also these discussions from your former activities in the management. And you have a very strong management background in banking. Now you have seen a bit evolvement of this development in banking. What do you observe in this regard? And with regard to the promise of transforming banking to a more decentralized finance, what are the major roadblocks you observe in that space?
Well, actually, you know, I mean, there are already some application in the banking industry. If you think of trade finance, where blockchain has been adopted, we have several examples there. But I also think, you know, sometimes it's the ambition that blockchain will just is the solution for everything. I think that this is just not feasible, and banking is as a business model way too complex, especially if you consider all the regulatory requirements you have, which in part, of course, can be mitigated or managed by blockchain technology. But I think, and here, you know, we're jumping over to decentralized finance. I think that in order to have a decentralized finance, we would need to have really a technology where everyone could have access, so all the banks would have access. But then if all the regulatory requirements, we would be able to build or to package them into the distributed ledger, into the smart contracts, then actually all this regulatory requirement would already be there, meaning that the regulatory requirements would be in place. And for that, you probably would have to ask yourself, or you would have to question whether you would still need banks who ensure that these regulatory requirements are still followed. Because if these regulatory requirements are part of the ecosystem, are part of how all the processes are done, then you wouldn't need the intermediator, in this case, the banks anymore. So I think that we are a long way from that, and this is why I think that decentralized finance in the banking industry will not happen anytime soon. But the concept itself and the technology, once we have blockchain technology which is more capable, more secure, I think that then this will become reality. But I don't think we're there yet.
Mm-hmm. When talking about these expectations, I mean, 3-4 years ago, we had these famous expectations, how much money we can make with that, how much money we can save, etc. It was also the discussion with this, how do you say, robo-banking, And robo-banking, what I heard in the last year was a bit a disappointment about the scale. It seems to be that clients, they they have not a very good relationship to that. I mean, there was the expectation that especially Silicon Valley people, like-minded people, they do not rely to an advisor anymore, and then everything is automated, etc. I don't know, what is your take on that?
I think that this is actually more like a kind of a psychological thing, and I've been involved personally in the launch of a robo-advice at the time together with Saxo Bank, and where BlackRock would have provided everything. You know, I mean, if you have like an asset management mandate with one of the big banks, even, you know, UBS and Credit Suisse, they will not tell you that this is actually a robo-advice. But as a matter of fact, you know, there is a chief investment officer who says, you know, what are the rules on how is to be invested, and they set this rule automatically. Now, whether you're telling the client or not, everything happens automatically anyway, you know. So I think, that being said, you know, people or the client, the consumers, they do not have the perception that things are automated, and they kind of also fear that, you know, when it's automated, they are not in control of things. But the reality of things is that today, whatever you're doing, everything is automated, let's face it. But probably when it comes, you know, to investments, when it comes to your own savings, your own money, people from a psychological point of view, they're much more interested in having a physical person, just, you know, a name to relate to, rather than just a system or a program or some rules.
Okay. There was a question from the audience, from Jörg Müller, definitely a typical question from an economist. To the crypto banks, in economic theory, a bank is usually defined as a deposit-taking institution, that is a financial institution that creates money out of debt. When I am listening to you, I think you are more of an asset manager and service provider. Is that right? And if so, do you think you will become a bank in the economics sense anytime soon?
Good point. Interesting.
So question goes to Katie and Georgine.
I think a very interesting question, if I may start, Katie.
Sure.
I think also, if you look at, you know, how the blockchain is set up, and in general, you know, how money has developed over time, it's a very interesting question. As we, you know, previously had back in the days, the gold that we transferred from one place to the other, it took like 200 years to have trust that you don't have the gold in your hands, but you have actually a number written on a paper that represents a value of something. And then over time, the banks came, and you would actually then bring your assets to the bank and give your ownership away. Because exactly what is mentioned, the bank then used this money to lend it out on the active side of the balance sheet. And now with the blockchain, the ownership goes back to the holder of the asset. And as such, those banks and are we a bank? Yes, we are still a bank, because we still do some credit products, credit and lending products. But at the same time, custody assets can be when on the blockchain can be held segregated, so can be held off our balance sheet. So this is an interesting development that is going on as well.
Okay, Katie, do you want to add something, or otherwise I have two more questions I want to really go into?
Let's dive into other questions, because, I mean, in short, Falcon, you know, the things that we do well is accept money, help grow it, and take care of things in storage. So that's what we've been doing. And now what we do now is we actually take in digital assets in the form of Ripple or Ether or Bitcoin, and people transfer that into us for safekeeping. So we take in digital assets as we would any normal fiat. So I can't really comment other than we're doing them both.
Okay, I see. Thank you very much for this. I want to go into the discussion more in the space of the competition is not just between banks and banks. It has become also competition between Finanzplatz and Finanzplatz. And this is quite nice to observe. Also, if you look at these central banks, they created now innovation teams. I mean, that 10 years ago, you haven't seen that phenomenon. And I mean, the countries, they compete with crypto, I would say crypto-friendly law. And Switzerland so far did quite a good job, at least from a marketing standpoint. But if you as a professional have to deal with the FINMA, etc., with that, etc., I think Switzerland could improve. What is on your side? What needs to be done to keep Switzerland the place to be for digital assets? Maybe Katie,
Sure.
you as a was an early adopter in that space, and what's your take on that?
So I think what has made Switzerland the epicenter, if I could call it, worldwide, is our legal framework and our regulators. And I think we've given a very clear message, and we meaning Switzerland, to the rest of the world, that we're here for crypto business, and that our policies in terms of banking are open to companies, although not everyone's in that space yet, and that we have a clear legal framework. So two of the main things that I think that are needed to keep Switzerland in the epicenter is the continued work on our legal framework. We're expecting in 2021 the digital assets law to come into stronger force. And I think the other one is infrastructure. That's something that we really need to ensure that Switzerland has a place. And on that particular point, I just want to touch upon what the BIS and the Swiss National Bank announced in October of 2019, their innovation hub, and which is a hub that brings together both Switzerland, Hong Kong, and Singapore to create a safe infrastructure and a place for people to test. And their focus is really on ensuring that we can provide a safe infrastructure for digital financial market. And the two key things that they're looking at is one thing that Tom originally touched on. One of their two projects that they mentioned is the creation and looking at a digital central bank money and putting that on a distributed ledger technology. And they're doing that and looking at that setup with SIX and SDX, the digital exchange. And the second project, which that they're going to be doing, which I think is going to be incredibly important, again, for us to show the world that we're on the top spot, is their second project is to ensure that they track and monitor fast-paced electronic markets. As Tom mentioned earlier, digital assets have been around for a while. But however, there's going to be greater automation and fragmentation of the financial markets, and there'll be an increase of new technologies, which Switzerland needs to keep on top of to be in that epicenter.
Yeah, great. Thank you very much for this. You mentioned Singapore, and that gives me, for Georgine, since you in SYGNUM has two places, Switzerland and Singapore, you have to be very friendly to two areas. What do you see? Is there a little bit of competition between Singapore guys and your Swissies?
Yeah, the competition is actually also very much of a friendly interaction. We saw that when we were preparing our application for the banking license, that the Switzerland was in the lead from a regulatory point of view.
Oh, that's interesting.
Sorry?
That's
Yeah,
yeah, I saw the Singapore has a much stronger interaction.
Yes, it's interesting. So the Singaporean regulator, we very much see them also very close also to businesses, to financial companies out there in the market. However, on supporting a product to go to market as a bank with a banking license, we saw that Switzerland was going to move probably first, and this is then also what came true since we first received the banking license here in Switzerland, and a month later an asset management license in Singapore from the local regulator. But at the end of the day, we consider both places to be obvious locations to build a financial institution that leverages this distributed ledger technology, and Switzerland and Singapore are among the world's most reputable financial centers, and they're very well equipped with world-class infrastructure, also very business-friendly and stable governments, easy access to highly educated workforces, and that's why for us it makes sense to already since day one be located in both locations.
That's great. Switzerland and Singapore are traditionally very active places, but surprise, Germany came up with a legislation that enables all banks, that's somebody who in the chat told that all banks can sell and store crypto since January 1st, 2020. Are there any worries on your side that you miss a train?
Absolutely not. I think it's great news, if you don't mind me jumping in here on that. And I think it's a really good question. But what I do understand is the German law requires that banks have to now, if they do wish to hold cryptocurrencies on behalf of their clients, they have to apply for a particular license to have the right custodial solutions put into place. So one is, go ahead, you're allowed. And the second is, but you've got to be fit and you've got to have the right setup in place, which is absolutely key, right? Because it's all about security and holding those private keys on behalf of your clients to avoid what I would call possession risk, that people lose their keys. So I think it's a great thing. And although Falcon is the first bank on the block in Switzerland to be out there in the space, I think it's great that SYGNUM is there too. And SYGNUM is also there in Switzerland, not just in Switzerland, but also in Singapore. The fact that we can show that more banks are getting into this space, the more adoption we will have. It's just going to become, it's a booster for us all. So I think the fact that Germany has now got the law out there, I think this is a really good thing.
Yeah, fantastic.
Sorry to add something. I mean, here in Switzerland as well, every bank actually can enter into the space and store currencies. So whether this is SYGNUM or Falcon Bank, I mean, there are also other banks coming up shortly offering these services, just that they have applied. So I think that this is kind of a marketing thing in Germany. And to be fair, and I'm sure that you read about it, already 60 banks have applied at BaFin for this license. Whereas here in Switzerland, the system is a bit different, whereas you have a banking license where you usually can do any banking service. But if actually you start entering in the new service, then you would have to inform FINMA and you have to show and prove them that you have all the services and racks in place. But actually in Switzerland as well, every bank would be allowed to offer crypto as services.
Okay, we have another 5 minutes to go. I would like to come to the last question, looking down the road. What are your plans for 2020 and what do you expect in the crypto and blockchain space to happen? Maybe Antonio, just continue on that if it's okay for you.
Sure. I just had a discussion with a very senior, former senior manager in the Swiss banking world. And, we just were discussing about what's happening on the financial markets right now. You might have seen, stocks have been collapsing. bonds are soaring right now. You know, due to this coronavirus and stuff. And clearly, you know, central banks are going to continue to print money at zero interest, so they will float the market or the world with cheap money. And one has to ask yourself, you know, okay, I mean, if this is so disinflationary, does it still has a value? And here is where the concept of cryptocurrency come up, which has been developed in the last financial crisis back in 2007, 2008, with the idea, you know, that it's not a value when you can reproduce something so much. So I think that we're really into discovering whether cryptocurrency, Bitcoin especially, will be one of the possible alternative in the financial markets. And I think that if this is going to happen, and we will see, in my opinion, in the next few weeks already, then it could well be possible that we'll see quite a number of banks also in Switzerland starting to offering this capability to their clients.
Okay, great. Listen, just 1 other minute for Georgine and then Katie, and then we have to finish because in 3 minutes we have the next session and I have to set up. Please, 1 minute for you, Georgine.
So plans for 2020, we will continue to execute our strategy really to bring the real economy on the blockchain. We saw 2019 to have been rather an infrastructure building year, and we see 2020 really a year where a lot of use cases are coming to the market.
That's fantastic, thank you. And Katie, maybe you.
I echo exactly the words of Georgine, but for Falcon. Last year was really setting up the shop in a deeper way because we brought out a second custody solution and building our processes and procedures in a deeper way. And this 2020, again, it's continuing our focus on offering safe and secure custody and our related services around the blockchain space for our clients. Are on the buy side, so we listen to our clients and we react to what they need rather than pushing out things that they don't need. And I think in generally for all of us, what we can expect in 2020 is more clarity around the strength of our infrastructures that we have. And I think an important piece is going to be how they resolve the open VASP and the standards that we need to be able to communicate additional data that has to pass through by law. I think that sets in June. So I think that's something we have to understand what that means so we can implement the right solution so we can trade between one another.
I like very much concrete dates that you say in June, etc. Because one question came from a viewer about when exactly. Many talk about it's over 2 years, etc. And this is one of the issues we have. We have some time to postpone, etc. But thank you very much for your talk. I'm sorry I have to finish now because we start with the next. I invite you to enter the next space, and then thank you very much for joining this very good panel. Thank you very much, Georgine, Katie.
Pleasure.
Thank you, Antonio, for sharing your insights, and this will be not the last one, I guess. Thank you.
Pleasure, thank you.
Ciao, ciao.
Bye.
Next stream.
So, können wir... Jetzt muss ich eben gerade sofort...